And even as we are now more than 1 week into the worst disruption to the global energy markets in history, oil prices are still far lower than they were during earlier crises in West Asia. However, an increasing number of energy traders and executives are sounding the alarm that the globe is getting closer to a tipping point with each passing day of the war. The oil market's worst-case scenario is starting to play out as ship movement through the Strait of Hormuz has almost come to a standstill. The amount of oil supertankers in the Gulf that are now empty is rapidly decreasing, which means that output will soon have to be curbed. Now, Qatar has already warned of that scenario. Crude oil marked the biggest weekly surge since 2022. Benchmark Brent crude surged over $93 per barrel, marking more than 25% surge for the war week. U.S. crude posted the biggest weekly gain on record. American oil added 12% on Friday, the largest daily jump in almost 6 years. While oil and gas prices have surged this week, they remain far below the highs seen just after Russia invaded Ukraine. Now, there were signs on Friday that some of the initial oil market calm was dissipating. Brent crude prices soared past $90 a barrel, taking their gain to more than a quarter this week. Analysts now warn that the market was still too complacent about the likely impact of a prolonged closure of the Strait of Hormuz. They predicted prices would hit $100 per barrel in days unless there was some de-escalation of hostilities. The energy markets are showing symptoms of stress due to the recent price spikes in diesel and jet fuel induced by shutdowns at refineries in Asia and West Asia. Bob McNally, president of consultant Rapid and Energy Group and a former White House official, said we see Brent reaching $100 a barrel and above in the coming days to weeks, once the market accepts that the Hormuz closure is a weeks-long event rather than a brief disruption.